Hello folks, this is Raj Sastry from Raj Option Trading. Today is May 4th, 2021. I want to talk about buying beaten down stocks. Normally, I love buying beaten down stocks, and these are some good examples of beaten down stocks. We got Sarepta Therapeutics, ChemoCentryx, GSX, and there are a few more we'll cover in detail. Normally, when you buy a beaten down stock gradually, and also make sure as you enter the stock, make sure there is some uptrend and it's showing some signs of improvement. That's when you start buying slowly and hold it for a long time, and you'll get a nice bounce and you can sell it for a nice profit. So with that, let's look at the numbers and some of the stocks that I'm planning to buy slowly. And for in some of these stocks, I'm already having some positions. I'm slowly adding to my positions. So with that, I've got a list of 25 stocks here, and these are ordered by 6-month performance. The one at the top, GSX, it has fallen down drastically in 6 months, 58%, and next one is Acadia, and so on and so forth. And I also listed out what the market capitalization, what the sales, and what the sales growth, what's the gross margin, institution ownership, and also short ratio, and the valuation, which is price to sales ratio, and performance all the way from 1 day to 6 months to 1 year. Then how much it is off of its 52-week high. That will give you a good idea. So normally what I would love to do is really, I will not be looking at companies that don't have good revenue. I want to look at companies with good revenue and also revenue growth, and want to make sure there is a good amount of gross margin, so that way at least companies retaining some of its money. So with that, let's look at some of these examples. On the top, we got GSX Techedu. It's a controversial company with a lot of acquisitions on the company. But as you can see here, they got good sales growth, and also their gross margin is pretty good. And as you look at here, they got a high short ratio, and institutions are owning 74% of this stock. And price to sales ratio from a valuation perspective, it's very low. And this company is announcing earnings in a day or two. High short ratio. If this company shows some positive news, these shorts can get easily squeezed and stock can go up. And as you see here, the performance, one thing I pay close attention to is really how is it doing, from a 52-week high. As you can see, it's minus 81%. Then look at 1 year performance, it's minus 23, and keep looking, 6 month, 3 month, 1 month, 2 week. As you see here, 1 month minus 11%, 2 week they gained some, 1 week they lost 11%, and in 1 day, which is today, they lost 4.51%. So as you can see here, their loss kind of, as it tries to narrow down as you go into 1 day, 1 week time frame. And also in 2 weeks they gained some. That shows there is some positive bias in this stock on a near-term basis, even though they lost a lot in 6-month, 3-month time frame, and also from 52-week high. I kind of look for these signs to see, is it trying to bounce back? If so, make a small position and hold it for a long time. Next is Acadia Pharmaceuticals. It's a $19 stock. Same story. Stock has been beaten down drastically, 66% from 52-week high, and they're also down 56% for 1 year. And as you traverse through here, 6 months down, 3 months down, 1 month again 23% down. But as you look at 2 week, 1 week, 1 day, there is some sign of improvement here. That's why I kind of buy this. $19 is a steal for this company, and also it's got a little bit higher short ratio. I think it's good to accumulate this stock also on this pullback. Next we have Hyliion and Root. These are pretty much down drastically, as you can see. And Hyliion does not have any sales at this point. It's a electric vehicle play. So I would buy these also on a down day like we have today. Don't buy too much, buy a little bit. These stocks will always have some bounce backs. Because company doesn't have sales, you got to be careful buying this. And also it's got a high short ratio that tells you any good news, this stock can bounce nicely. Next is Root. Root is an insurance company, as many of you know. Say they do have some sales, but I don't see any sales growth. Gross margin is nice, very good gross margin. Even this one is a meme stock. People love to manipulate this. It goes up and down, high short ratio. It's good to buy this also on a down day, like probably what we have right now, and hold it for a while and look for a good bounce back. Next four we got Fold, which is Amicus Therapeutics, Sarepta, AMWL, JinkoSolar, ChemoCentryx. Same story here, with the exception of AMWL, which is a little bit newer IPO, which has got a good gross margin. But I think company is turning around now, as you can see with the trend here. In a nearer term, it's trying to show some sign of improvement. That's why I'm buying this little bit. But other stocks, as you can see, Sarepta, Amicus, JinkoSolar, they do have good sales and sales growth. So that's why I'm buying this also slowly into the weakness and hold it for a while. Then you got DouYu International. It's from China again. It's a low dollar stock. Nice appreciation when it comes to sales and sales growth. Good gross margin. So I'm buying this also on this weakness. And then you got bunch of names here. IQ again. It's a Chinese stock. Nice sales growth is okay, not great, but it's okay. But beaten down drastically. And there is some sign of improvement, as you can see here in the nearer term. We got Alteryx. It's again a big data type play. Stock has beaten down, as you can see here, showing some sign of slow improvement here. They do have good sales growth here, so I'll be buying this also. This used to be darling of Wall Street a couple of years ago, but now it's has given some money back. I guess it's gone down drastically. Same story with Splunk. This used to be one of those great cybersecurity and data and analytics type play. Stock has gone down drastically. Even I'm buying this slowly onto this weakness. Its sales growth is negative at this point. It's a bigger company, with the $2 billion revenue. So this also is a good play to buy for long term. Nice gross margin. I love gross margin of both Alteryx as well as Splunk here. Next is JFrog. JFrog is basically a developer, DevOps type company. It's also a great company. Good gross margin. I think even here there is some bounce back, as you can see in the shorter term. It only went down 2% today, 1 week 5%. So it's kind of showing some improvement here. I would be buying this stock also. This can be a very good acquisition candidate for a bigger company because they're doing so nicely. Now we got Workhorse. Workhorse is again very low sales, as you can see here, but revenue growth is very high because it's going off of this low $1 million base. So this one is a little bit high from a valuation perspective. So I'll be buying this also on a pullback slowly. No need to buy a lot. Buy slowly. Buy in small quantities. Inovio Pharma, same story. It's a low dollar stock, high valuation, high float ratio. This one is also good to buy on a pullback and hold it. And with the high short ratio, you can expect some bounce once in a while. We got the next Zoom Video. Zoom Video used to be darling stock, last year with the working from home. But now, as you can see here, Zoom Video has given back a lot of, price here. They're down 48% from 52-week high. And I'll be buying Zoom. It's got a good CEO in Eric. I think this is a good one to, buy for a long time and take it from there. As you can see, there's some improvement in the performance of late. They're doing a little okay, but still down drastically. Next is PTC Therapeutics, nice sales growth as you can see here, and they are also pulled down 45% from 52-week high. And you can see there is probably some slow sign of progress here. Then you got ARRY and BigCommerce. I think ARRY is also a good solar play, as you can see. I think there is a good gross margin here, high float ratio. Some of these float ratios, I don't believe, because if you go to multiple websites, you'll see a little different float ratios, short ratios, but it's a high short ratio. Either way, that you could see some stock appreciation if the stock does well. Big commerce used to be one of those commerce plays, something like Shopify, but stock has given stock is down a lot from 52-week high, and there is some slow sign of progress here. 2 weeks it's improved a little bit, so it is also good to buy on a pullback like this, little bit at a time. And this also has a high short ratio here. You can expect some share price growth on a good news. Then you got Ceres, Equinox, B2Gold. With the exception of Ceres, which has got a 1 year negative sales growth, other two are doing well, good sales growth here. And from a short ratio perspective, Ceres has got a high short ratio, so this you can expect some share price appreciation and good news. And other two also are good stocks, low dollar stocks. I think it's good to play. It's mainly gold stocks, as you can see here. So with that, let's go into few stocks in a little more detail and see if you can invest in those. So first one is GSX Techedu. It's a technology-driven education company in China and provides online K-12 after-school tutoring services. So as you can see here, in the market, folks are wondering, bulls versus bears, who is right? And stock has popped on April 28th. This stock has been bouncing up and down a little bit of late. Goes to 30, 31, comes back a little bit, goes up, comes back. So it's a good trading stock of late. But if you look at the upgrade downgrade, we got Goldman upgraded on 28th. We got JP Morgan upgraded here. And we also have Citigroup upgraded. And these are good companies. So I think there is something to look at. You don't need to believe these upgrades, but at least there is some upgrades in these analysts. And if you look at the earnings per share, companies investing heavily into their own company, that's why it's negative. But sales has grown in a nice clip. I like this sales growth here. And shares outstanding is pretty stable, so not a red mark here. And if you look at the fundamentals here, companies are doing well. Nice sales, $1 billion, nice sales growth, nice gross margin. And as you can see here, even though they dropped 81%, as you see here, there is some progress in 2 week and also in 1 day. And from a fundamentals margin perspective, it's a negative margin. Company is not making money yet. Earnings per share is negative. They got a lot of shares which are available, which is okay. I mean, if you compare here, 239 back in 2020, now it's 255. So they reduced their share count, which is good. They got a good amount of cash, $1.1 billion here, and low debt. And stock is very liquid. They got a lot of volume here, which is always a good sign. You can go out without too much spread or too much money wasted. So we like to trade only the liquid stocks, which is always good. So with that, I recommend buying GSX on any pullback like this. Today it pulled back 4.51%. Good to buy some. It kind of goes up and down a little bit, so it's a good one to buy. And one thing I want to highlight, this company is changing its ticker symbol to GOTU, GOTU. I think it's sometimes in a couple of weeks. So keep in mind, you will not see GSX ticker symbol anymore. Instead, you'll see GOTU. So with that, let's look at the next stock in the GSX in a little more detail in the chart here from Thinkorswim. So as you can see here, earnings is coming in on 5/6 in just 2 days. And if you look at the stock chart here, stock has, earnings here, stock fell down a little bit, went up. Earnings here, stock went up. Earnings, stock came down. Earnings, stock fell off. So this is when, because short ratio is high and earnings is coming up in 2 days. And as you can see, a stock is trying to make a base and trying to improve a little bit, as you can see here. So if there is any good news here, stock can bounce nicely and, basically causes short squeeze. And right now, as you can see here, it's below 50-day moving average, 25-day moving average. It's trying to bounce off of 9-day moving average and also trying to bounce off of 25-day moving average slowly, but not there yet. And from an RSI perspective, it's very low RSI. It's just 38. So its stock is over sold at this point. Good to buy at this point. And implied vol is low, even if you're a option buyer. If you want to buy a call 3 months out or 4 months out, 70 delta or higher, even a call spread, it's a good one to buy because implied vol is low, IV percentile is low. You are paying not too much money with the IV percentile of 336.5. And from a volume average perspective, it's kind of going, it went up, came down a little bit. So not a great story, but I think it's sustainable at this point. On the positive side, check-in money flow is showing the smart money is moving into the stock. That's always good. So overall, I think it's a good one to buy on this weakness slowly and wait for these earnings to cause some short squeeze. Next is Acadia Pharmaceuticals. This used to be one of the darlings, but now this biopharmaceutical company, its kind of stock has fallen down. And they kind of address the central nervous system disorders, and they got various drugs. With that, from a positive news perspective, I think these guys are presenting to investor conference, and they're announcing quarterly results on May 5th, which is tomorrow. So I think this is also a good play. Tomorrow is the announcement. Stock can do well, I think, because stock is beaten down so much, 66% from 52-week high, and in 1 year they're beaten down 56%. So I think any good news, stock can bounce back nicely. And as you can see here, there is a downgrade April 7, April 6. A lot of downgrades that cost stock to came down all the way to $19. So which is very good price to buy this stock. Nice sales and sales growth here. I like this. Nice gross margin and nice institution support here. 8% short ratio. I think these guys can get blown out if the company announces good result tomorrow. And from a margin perspective, company is still not making money. Its net margin is negative, earnings per share is negative. They got a lot of stock shares available, which is kind of increasing slowly, which is a bad sign, but it's not increasing drastically. They have good cash. This company not going under. It's got good cash, low debt, and very good trading volume. 2 million plus. So it's a good liquid stock to buy. So let's look at technical from a chart perspective. As you can see here, stock has been doing okay, but they fell down drastically on this FDA news here. And after that, kind of trading sideways. Tomorrow is the result. RSI is really, really low. It's very low, around 40 or so. So that's why it's a good one to buy at this low RSI. Completely oversold at 30 at this point. And implied vol is also low. Its IV percentile is 19.8. Even if you want to buy a call, say 3-4 months out, 70 delta or higher, or even a call spread, you are not paying too much. From a DMI perspective, clearly it's a bearish right now. The red line is above blue line. That's a bearish indication. volume average is going down, meaning people are the people are not buying too much. But it's expected when a company stock has fallen down so drastically. Normally volume average is low. Smart money is slowly flowing into the stock. As you can see, there is some stabilization, some uptick here. That's a good news. I think with the stock at $19, I think people are really paying attention and buying some. So if you look at next one, so with that, I would recommend buying Acadia at this lower price and take advantage of earnings coming up tomorrow. I think that'll be good bounce. Next is Sarepta Therapeutics. It's again commercial stage biopharmaceutical company, and they have RNA targeted therapeutics. I think it's a good one for muscular dystrophy. And as you can see here from a news perspective, they're presenting, that's good. And they can also achieve 10% higher expression. That's also good news. Overall, I think there's some positive vibe here. And as you can see here, there is at least some multiple downgrades, and there's a neutral rating from Credit Suisse, and they're expecting the stock price to be at around 72, but stock is at 74. So that's a good news. I think stock has appreciated, as you can see here, 2 week, 1 week they have appreciated. So this is what I see. I look for some nearer term appreciation, and then you can buy the stock. There is some positive sign here. With the earnings per share perspective, it's negative. Companies still not making money. And from a sales perspective, I like this nice clip here. It's doing nicely from a sales appreciation. Shares outstanding are growing. It's a little bit concerned to me, but it's not growing drastically, so something manageable. And from a fundamental perspective, as you can see here, $74 stock, $540 million sales, nice appreciation from a sales perspective, good gross margin. I think those are the good recipe for success here. And stock will take care of itself. As you can see here, it's already kind of bouncing higher slowly. So I think it's a good profile with a good sales growth and good gross margin. And from a margin perspective, still not making it. They're not making money yet. Earnings per share is negative $7.11. And they do have good amount of shares available. It increased a little bit from 2020. It was 77 mil. Now it's 79 million. And they got a lot of cash and good amount of debt. And stock is again liquid. I think it's good to buy. You're not losing money through slippage. So with that, let's go into technical details with the Thinkorswim chart here. Stock was doing okay, came down drastically, big, huge gap down here, just like Acadia Pharmaceuticals. Now stabilization phase, and now there is some sign of progress. Earnings coming up tomorrow. So with that, as you can see here, RSI is trying to go up. That's a good sign. There is some life in this stock, due to these earnings and positive RSI. And even here, the DMI chart is showing some positive movement. I like, the blue line trying to cross over red line. That's a good sign here. I think that shows positive news here. Company can do well on the earnings with this positive bias. Volume average is kind of picking up slowly, which is a good sign, and the smart money is moving into the stock, which is always good. So with that, I recommend buying Sarepta into this weakness. I think it's going to be a good one. Last but not least, it's ChemoCentryx. These guys are into clinical stage biopharmaceutical, and they help with the cancer mainly, as you can see here. I think it's a good stock here. They're into treatment of patients with severe hydrantis. I think it's a good one to buy for long term. So with that, I think they got some news here. They reported and they had some Q1 loss, and they topped their revenue estimates, and folks are wondering to buy or sell. So with that, as you can see, they got some two upgrades here, which is in March, I think there's upgrade to 83 to 101. Now the stock price is at 26, as you can see here. Lot has gone down. Lot has happened before between March and now with a huge stock drop. From an earnings per share perspective, company is still losing money. Sales is okay, it's up and down, but at least 2020 nice bounce here, which is good. Shares outstanding is going slowly. One thing that I always pay attention to. But otherwise, good sales growth. I like this sales growth here. 1 year, quarter over quarter, they lost some. Something to watch out for. Good institution support here, and a little bit higher short ratio here. But overall, stock has dropped so much from 52-week high, 48% down from 1 year. And as you can see here, tries to little bit stabilize in near. I mean, it's actually not stabilizing, as you can see here. Even one day today, it dropped 45%. So I'm thinking that this could be a good opportunity to buy slowly, given it's a low dollar stock at this point. Good to buy some. Don't buy huge quantity, little bit at a time, and you could see a good bounce back. So with that, if you see the margin perspective, still negative margin. Earnings per share is negative. They got $69 million shares available, higher than what they had in 2020. Good amount of cash and low debt. And stock is liquid. They got 25 million shares traded today. Overall average $462,000 in last 3 months. So with that, I think it's a good stock. You could buy into this weakness and look for a nice bounce. From a technical perspective, from a TDM rated thinkorswim chart, ouch, what a huge drop here. As you can see here, 22.19 drop today. And I think probably they had their earnings, so that's why it might have dropped so drastically. And with this huge drop, there is a drop here, and implied wall picked up. Implied wall is 100%, so I would not be buying any call options. But if you want to sell some put options at a lower price, you could sell a put option with the stock at around $26. You could sell maybe $20 put option and make nice profit with this 100% IV ratio. But be careful. If the stock comes down, you will end up buying. If you're ready to buy stock, then you can sell some put option at a $20 strike or so. And when the stock drops so drastically, you don't need to look too deep into the chart here. Everything shows negative. I think it's you got to be contrarian to buy CCXI ChemoCentryx at this drop, but I think it'll always pay off. So with that, thank you very much. Happy investing.